So did I sell Hindustan Unilever? The answer is hi everyone, welcome to today's video. So let me start today's video by sharing a very short but very important story. So the story is that roughly 4.5-5 months back, I swung trade Nifty, and here is an entire video on that topic where I had publicly said that I'm going to invest a massive amount in Nifty 50 and I'm going to swing that Nifty. That within a period of 4.5-5 months time, I was able to make roughly 6.4% return. So if you annualize it, it will come out to be roughly 15% returns. Now the reason why I'm telling you this story is fairly simple, that people think that retail investors can't make 14-15% CAGR in the stock market. I have had so much pessimism when I talk about stock markets positively that retail investors can make money, but every time you will get hordes of comments that, you know what, retail investors can't make money, this, that. So I have done a public exercise where I have swung trade the Nifty and I've been able to make 15% CAGR. So if I can do it, anyone can by investing in very sensible assets. So this is the first part of the story. Now the second part of the story starts now, that recently I decided to sell some of my stocks. For example, I sold ITC, I sold a few other stocks, booked partial profits in a series of different stocks. And again, there is like a horde of people who keep on believing that, you know what, you should follow buy and forget. That buy a stock, forever hold it, and that is the only sensible way of investing in the stock market. This is what big investors also do. You are completely incorrect if you believe in that theory, and you are again going to make a loss. And I will prove that to you with data. I will show you the data of big investors, how they are trading in the stock market, why they rotate capital, when they rotate capital. Please watch this video. I will explain the entire story in 6 simple points by giving relevant examples from some of my basic videos. Please watch such videos. Please make notes. Only then you will understand complicated strategies associated with investing in the stock market. I am trying to explain all these points in very no-nonsensical and very easy to understand manner. So let us get the discussion started. And point number 1 that you need to understand is that you need to rotate your capital. What is capital rotation means? It means selling some stocks and then reinvesting that money in terms of buying some stocks. All big investors are doing it, and here is the data to prove it. So this is from Mr. Warren Buffett's latest filing, and what you will notice is that in the last quarter, he had a 360 billion portfolio. Now he has cut it down to roughly $300 billion. So he has reduced his position. He's not following buying and forget that he has purchased $360 billion of stock. When he gets new money, he'll keep on pouring more money. No, he keeps on fluctuating his position. Every sensible investor does it. Let me prove that to you by showing you the metadata here as to how his portfolio size has changed over time. So here is the quarter-wise data, and you can see his portfolio size going up and down, and finally he has cut some of his positions. And if you study like a 10-year chart on his portfolio holding, you will categorically see that there are times when he's sitting on cash, there are times when he books profit, moves away from the market, there are times when he's aggressively buying stuff. So please do not discount the fact that big investors do not rotate their capital. They move out of one sector, purchase a new sector, and undertake all complicated actions. Now you might say that, okay, you are just showing one big investor's portfolio. What about others? Okay, so let me show you one more. So let's pick Mr. Ray Dalio's portfolio. So you can clearly see that he has lightened some of his position, and more interestingly, what you will notice is that he has taken separate position within different sectors. For example, take a look at consumer staples and consumer durables, right? So you see this orange tabs, right? That they have been increasing in size over time. Starting from Q4 2020 onwards, he has purchased more of consumer discretionaries. Now take a look at consumer staples. Now this is outlined by this light blue graphic, and you will again clearly see that up until Q4 of 2019, he hardly had any position in it. And over time, he is increasing his position in consumer staples. Now, what is the point that I'm trying to say? Number 1, that Mr. Warren Buffett, he has lightened his position. Mr. Ray Dalio, he has rotated out of some sectors, invested that money into other sectors. Every big investors books profit, rotate to different sectors, and sometimes they just sell their stocks and sit on cash. So please do not believe in the narrative that stock market is that you just identify like good stocks, sit tight forever. That is all BS. Please try to look for data. Please Google it. All this information is available, and you yourself will be convinced that you need to understand the intricacies of the stock market in order to make money. Now, here are a few quick points that I will tell for retail investors. That number 1, please sit and learn about stock markets. Please watch slightly more complex videos of stock market investing. Only then it would make sense. Point number 2, please be a diversified investor. This is something that I have always advocated on my channel. Why is that the case? Because as retail investors, we have very less information. So it makes sense for us to stay diversified. It is very very important not to allocate more than 5 to 10% portfolio on any single asset. I keep on advocating the fact that you should also take geographic diversification, that please invest some of your money outside India from a hedging purpose. And for that, you can check Vested. I personally buy all my US stocks through Vested, and I'm linking some of my favorite Vest, which is a collection of stocks that I'm buying in the US market, in the description box. So you can go check it out, learn more about US stock investing. You don't need to do it right away, but at least read more about it. So now comes the second question, that should you change your mindset about certain stocks as per the given dynamics? The answer is yes and no. So let me explain that by using some examples. So I have been speaking about Hindustan Unilever stock from last November, December onwards, when there were very high inflation concerns. In fact, it got to a point where in almost every single video I was speaking about Hindustan Unilever, that hey, this company has had a history of dealing with inflation, and therefore I am investing heavily in those stocks. Again, you can go and check out my videos. Now, during that time, HUL was trading at somewhere around 2000, 2100 levels. I purchased in bulk. I came out with so many videos that hey, great stock, aggregated, wonderful stock, has the history of fighting inflation. It will be able to beat the competition easily. Now check the performance. It has reached approximately 2600 levels. I'm not saying that it will not fall down. It very well can fall down. But am I investing more of my money in HUL now? The answer is no. What is the point that I'm trying to tell you? I'm trying to tell you that market circumstances change and your narrative about certain stocks also change with time as per the pricing of the stock. I was extremely bullish on HUL when it was at 2000 levels. But now it's not as if that I'm not bullish on HUL per se, but I'm not buying the stock. Am I selling HUL? I will reveal the answer subsequently on the video. So this is example number one. Example number two is about tech. So over the last 1.5 months, I have been making videos that hey, I had been buying something like TCS quite aggressively. Now a lot of people start creating ruckus that Akshat, you know what, at one point in time you were against buying any tech companies in India. Okay, so let me show you some history around that. At one point in time, TCS was trading at roughly 4,000 rupees. Then it fell all the way to 2,900 rupees, and it was at that period in time, approximately 2,900 to 3,100 range, that I had been extremely bullish on tech stock. This was again the period when I made a lot of videos around Apple, buying Apple heavily, buying Microsoft heavily, buying Amazon heavily. I had aggregated enough positions in these type of stocks at sensible ranges. I turned bullish about these stocks when the prices were right. Now let me take you to a related example of Apple stock. And why did I decide to sell some of my Apple stock? So you can clearly see that it has recovered quite a lot from its bottom, and it was almost hitting at its all-time high. So I sold some part of my Apple portfolio. It's not as if that I completely exited the stock, but I booked some profit. Does it mean that I lost faith on the stock? The answer is no. But sensible profit booking is very, very important, and for that you need to be open-minded. Just because I love HUL does not mean that I will keep on buying that stock at any price. That is just madness. Similarly, I am open to stocks that I was not previously open to. For example, TCS, if it was available at 4,000, why will I go and buy it? If it is trading at an all-time high, markets are very high, why would I invest in highly aggressive, volatile sectors? I would refrain from doing it. But when it fell to 3,000 rupees, I aggregated in enough quantities. Now I know for a fact that I'll be making decent profit on that stock. So the bottom line is that you must change your perspective as per the prices of the stocks too. Now this particular point of profit booking is extremely important to understand, because if you do not book profits and if a stock that you're holding goes down, especially when you're holding it in big quantities, you will lose confidence, you will start panicking, and you will never average down your position. Let me give you an example. So for example, here is an old video that I had done about a stock called as Equitas Holding. At one point in time, I was sitting on a profit of 27 lakhs from one single stock, which was Equitas Holding. Now here is the price chart for it. Now I was lucky to purchase Equitas Holding somewhere in this range. Then it gave a run up. I sold maybe like 30% of that stock, booked some profit. Then it fell. And it started falling, and it started falling till this point, and it fell quite a lot. Now, with the rest, 70% of my portfolio, what did I do? Did I panic? The answer is no. Why did I not panic? Because I had already booked 30% profit on my initial stock. Did I lose faith on the company? The answer is no. I am still very much holding that stock. But what you need to understand is the psychology of investing. That if I have invested huge quantities in some stock, and if that stock falls, then of course people are going to panic, especially when they are beginners, especially when they are not in a habit of seeing any type of losses. You are going to panic if you have not built your position in certain stocks. Therefore, profit booking is very, very important, because more than anything else, it gives you the confidence that since you have booked some profit, at least you will not be seeing major losses on that particular entity that you're holding, and it will give you the courage to maybe even build more position. By building more position, I mean investing more when the stock or the market actually falls. So should you book profits? The answer is 100% yes, you should be booking profits. Now that does not mean that you should completely exit the stock. By exiting the stock means that I have 100 units of Apple share and I'm selling everything and going away. That is not something that I did with Apple even today. I sold a part of Apple because I felt that hey, it is reaching at reasonable valuation and I am selling it. So now comes the next important point, that should you be booking losses? The answer is that it depends, and let me again explain that story by using an example of India Bulls Housing Finance. So a lot of heat has been generated that Akshat, you know what, we have invested our entire capital in India Bulls Housing Finance. We in fact broke our FDs and sold our house also to invest in India Bulls Housing Finance because you made a video. Okay, please go and watch the video. What did I say? It's a highly volatile stock. It's a swing trading stock on the real estate sector. So that's part one. Part two, I'm going to invest in 10 installments, not in one installment. So that was two. Now here is the date of the video when I have released it. And since then, unfortunately, the stock fell a lot. But delve deeper and understand why did the stock fall? Because I had made the video in January, and you tell me from November to almost May, June onwards, the entire markets, Indian markets, global markets, blue chip companies, small, mid cap, large cap, everything was falling. A little bit of recovery have started to happen now. Now, during such circumstances, you will panic if you have unnecessarily purchased a stock that you did not understand at all. So please avoid doing it. Point number two is that you might be panicking if you have invested too much amount into it, that you did not listen, you sold your house and entire money goes to India Bulls Housing Finance. Now that is a ludicrous way of investing. Point number three is that you don't know what the business prospects are and you have no idea when to exit the stock. Have I sold the stock? The answer is no. Why have I not sold the stock? Because I still feel that it is okay. Should you be doing the same? It depends on your portfolio. But the important positive point I can tell you about India Bulls Housing Finance is that look at its growth in the last 1 month. So as of today, it is trading at roughly 27.7% gain in the last 1 month itself. Will it beat its previous peak? Should you be buying more, etc., etc.? Highly advanced question which I've stopped answering in public forums because it unnecessarily creates more ridicule. So please take my commentary just as research points. Whether you want to buy it, not buy it, that lies completely onto you. If you want more advanced concepts, I have created a separate YouTube community. You can join that by just pressing on the join button, and I am explaining more advanced concepts there which I can't explain to general audiences because they will simply trade on it and hold me responsible. So please take these videos as me consolidating all the research points for you. So in summary, if you have lost faith on something like India Bulls Housing Finance, and if you have no faith on business, if you have no faith in terms of real estate prices recovering and India Bulls Housing Finance benefiting from it, then you should sell such stocks on a loss and move away. On the flip side, if you believe in the growth of the real estate sector, that hey, it is resurging, it is coming back up, then holding something like India Bulls Housing Finance might be the right. Now comes the fifth point, that I have heard stories like that Mr. Rakesh Jhunjhunwala, he purchased Titan, held on to it and made like billions. Should I not be doing it? Yes and no, that you should be doing it, and also on the flip side, you should not be doing it. Let me help you understand that by using the example of Hindustan Unilever. Now you all know that Hindustan Unilever is one of my favorite stocks for a wide variety of reasons. I purchased it in bulk. I keep on aggregating it. I had purchased excessive amount when it fell to 2000, 2100 levels. It hit almost 2600 and now it has started to go down. So did I sell Hindustan Unilever? The answer is absolutely not. I did not sell even one unit of Hindustan Unilever. Now, why is that the case? It all comes down to the business confidence that I have on a particular company. So I have fairly high level of confidence on Hindustan Unilever. Now you might say that Akshat, we are not like business analysts. So how do we have faith in certain companies? For that, you just need to do a simple thought experiment. Of course, read annual reports, aggregate a lot of information. All that research needs to be done. So that is part A. Part B, what important question you need to answer is that will you be okay seeing whatever portfolio you have built on Hindustan Unilever fall by a negative 10%? If the answer is yes, that hey, I'll be okay with a 10% fall or 20% fall also on this stock, then you don't sell it. That is the level of confidence that you need to have. For example, I tend to aggregate Hindustan Unilever on every single dip. I had done some bit of profit booking, very little profit booking actually, long time ago on Hindustan Unilever. It was one of my earliest stocks that I had purchased and I'm fairly confident about the company, so I keep on aggregating it more. Now I'm sitting on huge profits. Why? Because I purchased something like Hindustan Unilever in bulk every time I get an opportunity. So given the trust that I have on Hindustan Unilever, I do not sell it. I identify 3-4 such stocks in my portfolio and I tend never to sell those stocks. Again, can I give you a list? The answer is no. There is no point in me giving that list because again, you will unnecessarily copy that same strategy without having your own trust on it. So this brings us to the sixth and final point that Akshat, you own like so many stocks. So just to give you an estimate, I own roughly 65 to 70 stocks. Why? Because my portfolio size is big. Now, when people hear that number, what they think is that, hey, it's better you just invest in Nifty. No, because I do theme-based investing. What is theme-based investing? For example, if I'm doing tier 1 blue chip banks, then I will have HDFC Bank also, ICICI also, Axis also, and Kotak Mahindra Bank also. Why? Because these are tier 1 blue chip banks, private banks. And if I have to, let's say, invest 50 lakhs into it, then I will split my money as per how much trust I have on each of these business, and I will consider these 4 stocks as one theme. Now, people can have their own analysis, but I truly feel that these 4 banks, the ones that I talked about, their forward-looking business strategy is not that different. Yes, they are catering to slightly different customer base, etc., etc. But if I have to say that, hey, there is like one specific business strategy that HDFC is using right now, which makes it very different from something like ICICI Bank, then I can't find that strategy. So these 2 stocks become somewhat similar to me. So if I identify 20-25 such themes, then de facto, I have how many stocks? Roughly 25 stocks, so to say. Because I'm doing thematic investing. That's part A. Part B, something good comes out of it for me. For example, I'm able to rotate my capital more efficiently because some days you might have seen that ICICI is giving a breakouts. Then I will book a little bit of profit there. I will plow it back into HDFC. So this allows me to optimize my short-term and mid-term gains. So here is the quick summary that number 1, you have to book profits. Number 2, if you lose business confidence in a particular stock, please sell it even at a loss. It's not end of the world because out of 10 trades that you will make, it is completely okay to lose 5. No one can be 100% correct about all the trades and investments that they are undertaking. Third key point, that you must rotate your capital as per sector allocations, as per market dynamics. Fourth and finally, please think about your portfolio. Be spread across different sectors and specific geographies. Fifth and final point, that it is very, very important to learn complicated concepts about stock market investing. Stock market is a wonderful place where through direct stock investing, you can easily make 15 to 18% CAGR. It should not be a problem. If I can make a 15% CAGR on Nifty 50, then all of us can definitely make between 15 to 20% CAGR through direct stock investing. Please make notes and share it with your friends, and I will see you soon.